There's plenty of work to be done.
Yes, but because Bitcoin does not need VCs, Bitcoin does not need marketing, Bitcoin does not need all the stuff that VCs in Silicon Valley wants to offer, right? And like she's saying, there's no need for them, so they don't know what to do with it. So they'll see it, and you're right. It's the, let's make something and break things and iterate, right? Until we figure out product market fit, right? And they can't right? And there's no need for any of that.
I think Neil really nailed it. He said Bitcoin was created and it fucking worked, and they can't understand that. They cannot wrap their heads around it.
I think another part of it is part of the Silicon Valley ideology. It's deeply. It's like it's not necessarily. I guess I would say it's like a form of communism in a way, where they believe, in the same way that a communist central planner believes that they have enough information to make decisions about the rest of society. I feel like there's a sort of utopian vision in Silicon Valley that believes that, if they can properly use software to engineer a centralized top-down model and sort of like plan a better society that way. And Bitcoin, by saying, we're just going to have 21 million coins, we're not going to have monetary policy, we're not going to have anyone make these decisions, that really ruffles their feathers compared to something like Ethereum, which says our monetary policy will be based on the security that is needed for the chain, which is, clearly not decentralized. It's clearly just, monetary policy that's at the hands of the developers. And I think that sort of appeals to them more so. And they don't like the idea of it being completely uncontrollable.
If I may add something, we were discussing something like that with Vlad on Twitter today, and it pointed out that sometimes it is it's just signaling. They are signaling that they don't like Bitcoin, but in the end they are buying Bitcoin and they are investing in Bitcoin, maybe privately, which is very.
All right, where's our next question?
Can I ask a question?
Yeah, go for it.
I missed the bit on diversification, and I'm not an expert, but I'm a believer. So I've got about 20 to 25% allocation to GBTC, and I haven't gotten more sophisticated than that because I just don't think I can. But is there a view on API 3?
What is API 3? I'm sorry.
Okay, I don't know, to be honest. A buddy of mine who works at a Bitcoin hedge fund told me to look at it, and I Googled it, and my eyes kind of glazed over, so I figured I would ask people who knew a lot more than I do.
It just helps if you know, if you're able to participate in the back and forth.
Was that a question or a comment? That's exactly what I'm looking for. I don't, like I said, all I've done is own GBTC for a while, so I'm not an expert, but I figured somebody would know what API 3 was.
It's some kind of shitcoin. I just Googled it.
Yeah, I just looked it up too. I would advise against anything besides Bitcoin. Every other, shitcoin is just a way for the founders to take the Bitcoin from you and give you a shitcoin in return.
Okay, shitcoin. That makes it very clear. And then I know Tina didn't want to answer this, but I'm curious where you guys, who have a lot of conviction, have this sized as a percentage of your, liquid assets or tradable assets or net worth. Like, is it 5%? Is anybody at 70%?
We tend to match the percentage in parallel to our conviction, just like you said. So if we have more conviction, our percentage is allocated more. We also tend to allocate based on our understanding of the Bitcoin protocol. And, some of us are all in.
Right.
Some of us aren't. And we're not telling you.
I'm over 95%. And if you take into account leverage a lot more.
Yeah, some of us are at 0, some of us are at 100, some everywhere in between.
Some of us are over 100. We're taking out loans, but
okay, so
no one can make that.
Right. So why does that matter to you?
I lost all mine in a boating accident, unfortunately.
Yeah, same. Unfortunately, I'm a boating accident survivor. I deal with this.
I can explain.
Hold on. I deal with this with my friends all the time. People want to know the amount you're in for validation for themselves to make a decision instead of putting in the work to build up their own conviction. And I'm not trying to be like mean about your question. This is just what I've come to when like friends ask me, "Are you buying today? Or you're not?" It's because they want to just shadow what I'm doing, and they don't want to do the work and build up their own conviction. And maybe that's, I'm not saying that's necessarily the reason you asked, but that's what I have found with most people.
No, it's like Tina said before, it's a big boy game or a big person game. I've come at it from a different perspective, which is I recognize what I'm able to know or not able to know. But I also recognize that this thing is bigger than what it's been given credit for. So bonds have a historical vol that's easy to calculate, call it 3 to 5. Equities have a historical vol of somewhere between 9 and 15. And I size my allocations based on the volatility of the asset classes. And with Bitcoin, I don't know how to compute the volatility. So I've been very much doing it by seat of the pants and just curious where other people who are smarter than me and able to actually do the analysis. I can do the work. I just can't draw the conclusions. I don't understand it well enough. So if there are people who understand it better than I would, why wouldn't I want to understand it?
Nobody can understand it for you better than yourself.
Wait, but in terms of the Tina,
No, look, and somebody said I'm levered long. That says a lot.
Levered long is a stupid position. So if you want to take a stupid position, be levered long. Here's Ricky, number one.
Yeah, that's fair.
Volatility. Hold on. Volatility is a really bad way to choose your investments. I know that's what some finance people think you ought to do, but it's actually quite stupid. So it depends a lot on what you're investing in. You might have chosen to buy Google, or you might have chosen to buy Facebook, or you might have chosen to buy Netflix. And if you sized it at too small a percentage, maybe you missed out on a huge opportunity. It is the reason we say it's about your understanding, because that way you can make a judgment. I think you're looking at something which is going to go up 100x in this decade. What should you size it as? I think that the legacy system has much more risk than most people think. How should you size your Bitcoin? You need to understand what this thing is. You need to do some thinking. It doesn't matter what I think about it. It matters what you think about it. I don't live with your financial decisions. You do. And you need to really develop some thinking and some understanding about it. Maybe you should have 90% of your wealth in Bitcoin. I think Bitcoin is the best risk-reward trade in the world by a lot. I think that you may make no money in bonds for decades to come. There may be a time that you lose a lot of money in bonds in the decades that are yet to come. There's a lot of thinking you have to think, and nothing exists in isolation. So you're asking a question that cannot actually be answered. And I know you're probably not happy. You're not happy, but what we can do is give you a way of thinking about it to help you answer it for yourself.
No, your answers have actually been very constructive.
Ricky, one thing I want to say on this is I think the problem that a lot of traditional finance people I've spoken to have with Bitcoin is they assume that volatility implies risk, because in the traditional financial paradigm, it typically does, right? You see higher returns with riskier assets, and you see lower returns with safer assets. You see that with credit ratings and whatnot. And I think that Bitcoin just completely operates outside the traditional financial paradigm, where it is simultaneously the highest yielding and lowest risk asset at the same time, because it's such a paradigm shift and because nothing can compete with it. So I think that's something you really need to think about.
I absolutely agree with it.
Yeah.
So, look, I absolutely agree. I guess my sizing question really comes more from the idea of, okay, well, I'm not ultra wealthy, so I always need liquidity. And right now, U.S. dollar, I'm in the U.S., so U.S. dollars is how I pay my obligation, my debts, my taxes. And I'm not 60, I'm 44, so I've got a bunch of obligations to pay in the future, and I could totally see having 70 or 80% Bitcoin. I need to match that up with my cash flows, right?
Points. So don't put money into Bitcoin if you think you're going to need it in the next 5 years. How's that?
But to the point about leverage, and no, Tina, look, you get this. I guess you've worked around some type of active asset management strategies for a long time. But you could also say, okay, I'm going to take 25% of my net assets. I'm going to go lever those to be more aggressive, and I'm going to barbell that with a 30% cash position that I'm going to use for liquidity, so I don't have to worry about the mark to market. So hearing that there are people who actually levered long into Bitcoin, which I agree,
I would strongly suggest that you not. I think that the problem, if you were, let's say you bought Bitcoin, you paid $1,000 for Bitcoin, and you're sitting at $45,000 today. So at $58,000, you went out and took a 5% loan against that. Sure, maybe that makes sense because you have deep ownership at $1,000. You're up 58 times your money. You borrowed 5%, so it would have to go down a long way for you to get the loan out of your position.
Yep.
But it's a very volatile asset. So I think people continually misuse and abuse borrowing and lending and margin in markets. I think they misuse it all the time.
totally.
And you have to be reasonably sophisticated to use these tools in a reasonable way. And there's not as many avenues for hedging. In this space, we have regulatory barriers. I might be able to use certain exchanges if I were not a U.S. citizen that I can't really use. So I don't necessarily have good ways to hedge my position. Others around the world might have better opportunity to do that. So it really depends on a lot of factors. It depends on, who you are, what country you're located in. It depends on how old you are. It depends what income you have. It depends on what savings you had. If you have $50 million, you say, well, I'm happy to put $40 million into Bitcoin because I've got $10 million to live on, and I don't have an income, but I've got $10 million, and I can live on that for the next 5 years. It's like, oh, sure, you want to put $40 million into it. That might be a great choice. But if you have $100,000, putting $80,000 into it might be a very bad decision for you because you have expenses. That they're going to hit you, and you make whatever you make in the way of income. These are decisions which are very personal, and no one can answer these things for you. If you sat with a financial planner or a stockbroker and tried to guess how you should be allocated, they would have to ask you these questions and discuss it with you to help you think about this. And at the end of the day, that's all anyone can ever do for you, is help you think about the risk you want to take.
Yep, I totally get it. I appreciate everybody's feedback.
All right, thanks. Next question, who's up?
I guess it's me. So I am bullish on Bitcoin, so please hold the attacks, but just let me get the question out. I was curious. I've heard a few of you mention that Bitcoin is going to eventually be the only money, and I hear a few people mention the fact that fiat is inflationary, and they paint it as a negative aspect. And while it is negative for a fiat holder, it is a positive for the economy. How do you think the world economy works in a world where holding the store of value returns such a high return that people have no incentive to shop or invest or?
I think you have a lot of assumptions here, most of which are wrong. So number one, there's nothing wrong with a money which is not inflationary. I think your understanding of that is what the typical economist would say, which I think is wrong. You have to understand what the role of money is. The role of money is to help transmit price information and to help transactions get done in an economy because it's the most saleable asset. It is answering the coincidence of wants. It's enabling resource allocation in an economy. A lot of economists today think we need an inflationary money because we've created a system with massive debt loads. And so if you had a deflationary money, those debt loads are going to implode because they've created a gigantic dumpster fire of a global financial system and global financial markets, which is constantly on the verge of implosion. So you have, repo rates would spike dramatically. I can't remember when it was, 2018, September 2018. You have system constantly ready to ride right off the rails because they've screwed everything up. So all your assumptions that you think you know or you think you understand are fundamentally flawed. We live. I know you do, but we live in a world where you have all kinds of technologies. Technology is, by its nature, deflationary. Jeff Booth has discussed this in great length, and he's done podcasts and had discussions on it. We actually we're at odds in the way our economy works because we have these technologies which are, by their nature, all technology is deflationary because you can do things better, you can produce more with less. That is by its nature deflationary. You actually have to ask the question, why is it that I have to pay more for these things that I should actually be paying less for? Because these companies producing these things have actually gotten better at producing them, and this stuff's costing me more now. You have to ask yourself, what's wrong with this economy that's making me pay more for these things that I should be paying less for? And people don't ask that because they just accept the situation as we have it. I forget the other things you said that are really off base, and so I can't really address them. How do you want to push back?
The question to you basically is, put yourself outside of the shoes of a Bitcoin hodler, right? Like I said, I'm bullish on Bitcoin. I think by nature, just because a bunch of large companies are getting invested, it's a snowball that's going to continue to snowball. I'm not arguing with you on the value of Bitcoin or the value proposition at all. No arguments there. My question to you basically is, if fundamentally a maid is going to go to work today and she's going to earn 1 Bitcoin, she knows that tomorrow that 1 Bitcoin is going to be worth 2 pieces of bread, but today is currently worth 1 piece of bread. Will she buy that piece of bread today? And then hold on.
Are you saying
I want to finish one of it.
I'm going to clarify. This is such a ridiculously dumb argument. Are you saying that she's just going to choose to starve instead? I mean, clearly people are going to have needs
because
and wants.
there's a big difference between needs and discretionary spending, right? So we're talking about a huge segment of many countries.
People won't buy shit. They won't buy shit they don't want because they have a good money now. They won't be forced into spending it.
Yeah, so think on longer time horizons. So think about savings and providing for the future. But, I mean, to your point, we have a technology industry that's incredibly deflationary, which has massive gains year over year, and yet goods still fly off the shelves. I mean, I just think it's really naive to play in this theoretical world when we see the real world right in front of us and we see, oh, my God, the Oculus Quest came out. They were sold out for a year, and, 18 months later, they had a brand new one that was many times better, and now you can't get any of those, and there's going to be a new one after that. So it seems like you're just kind of operating in a theoretical world that doesn't, really take in the way humans interact in real life.
I don't think it's a theoretical world. I would just ask one last question and then leave. Why are all fiat currencies inflationary? Is it just by pure?
They don't have to be. They don't have to be.
But what?
We live in a world where the money that we use comes from debt. Money is produced by banks. So when they create money by making loans, and it's actually the lending process which creates money. And so we have a system which is kind of founded on that basis. You could grow the money. You could probably grow the money supply at zero, and money could accrete in value. I think that people think about this wrong, and I think that money doesn't create wealth. All an increase in the amount of money does is steal some wealth from someone else. You lose buying power when that money is inflated. It's a form of theft. It's a form of taxation. It's actually worse than taxation, it's just outright theft. When more money is put into the system, forget about the methodology or how it happens. If we go from having 100 units of money to 200 units of money, those people who have access to that additional 100 units of money can probably go purchase things from you and from others at old prices. This basically is the idea of the Cantillon effect. And they're effectively just stealing what you have, because before you understand that this money's been put into the system, prices didn't immediately rise. There's usually some lagged effect. But it's actually just a form of theft, because someone else got access to that money and you didn't. Your money didn't go up by that newly issued amount. So they basically just stole your wealth from you.
There is a real
inflation
downside to people holding value on their accounts and not participating in the economy versus the current system that we have today. Right? The current system.
Wait. Rephrase. Say that again. I lost you.
There's a real downside. If you have an economy that is based solely off Bitcoin, and you have an economy in which a portion of the value, a portion of the value is stored in accounts, not actively participating in the economy. It's not being circulated, right? It's just remaining on these balances for however long the owners of these accounts determine, but in perpetuity almost. There's a real cost to that.
The value of the buying power will accrue to everyone pretty much evenly in the economy. If I choose to hold my money in that asset, the Keynesians will tell me that I'm hoarding. But I am making a choice. And it used to be that economists used to think like this. They no longer think like that. I can make a choice. Savings is a choice of not consuming today. That's what it's a choice of. I choose not to consume. Now, I might not also want to invest today, but I always have to make choices on savings, consumption, or investment. But by my holding my value in my Bitcoin, I am helping to increase the value of their Bitcoin to everyone else. Because by spending my Bitcoin, whether it be on an investment or on consumption, that actually decreases the value of Bitcoin for everyone, just as much as when you go out and you sell your Bitcoin for dollars. That decreases its value. The same thing actually takes place. Nothing's actually changed there. So if I go spend my Bitcoin on a house, that actually is now decreasing the value to some extent for everyone. So there's a benefit to everyone by my holding my Bitcoin. I think your underlying assumptions, the way you think things work or would work, are flawed because your underlying assumptions are wrong.
So you're only viewing this from the perspective of a Bitcoin holder.
Not at all. I'm viewing this perspective of the economy. You're not understanding how the economy actually works.
No, I do.
From a Bitcoin holder.
Hold on, I do. Because the economy has two parties involved. There are consumers and sellers. But the fundamental piece here is that if you are not a current holder and the assets that people are holding is only increasing in value, those people are less willing to share those assets with others.
Well, that assumes. Wait, no, but you've got a flawed assumption. But let's start with your flawed assumption. Let's start with your flawed assumption. I'm not just going to let you rant on with gibberish. I want to attack your assumption. So the only reason I don't consume is I've chosen not to consume. Why must I consume? If I don't want to consume, why do you tell me that I must consume?
No, I don't think you.
Well, you just said that. You just said I was hoarding, and I'm doing something bad by my hoarding because I'm not consuming, and I'm not doing my part as a consumer in the consumer society. You just told me that.
On an individual level, it's totally fine for people to choose not to consume, right? But if you have the actual form of storing value itself incentivize people to not consume, then we will see something occur that has never occurred with any other form of money that we've had so far.
Exactly. We'll have much better investment is what we'll have.
Tina, let me take a crack at it. So
please go ahead.
And this is an amazing point. This is an amazing point because you just said it's going to change the way that people behave, meaning we're not going to be as materialistic.
Right. Yeah. Right. So
Yeah, but one second, Albert. So you asked a very important question. You said, are all fiat currencies by definition inflationary? And I would answer yes. And the reason the answer to that question is yes is because if you have the ability to print more money, the incentive to do so is so great that it is impossible to resist the temptation. And this is also the same reason why I don't like Ethereum, because someone has control over it. So just because they have the ability to print, maybe they're good guys and they're not going to print it, but just because they have the ability to do so, I know at some point in the future, it could be 100 years from now, they're going to make more Ethereum. So and to answer your question again, I'll reiterate the point I made earlier. It's not, Bitcoin is not the scarce resource. This is what most people don't understand. This is what socialists don't understand. They think it's all about money. Money is not the resource. Money, what you can buy with the money is the resource. Human time is the only scarce resource. So if I'm sitting on 200 Bitcoins and I'm fabulously wealthy, and it's like, and I never spend it on anything at any time at any point, that doesn't make any sense. You're assuming I'm never going to spend that 200 Bitcoins. Yes, I'm going to buy a private jet. I'm going to buy a private jet when Bitcoin doesn't have a price. I am going to get a private jet because I don't want to stand in TSA lines. So you're assuming that it's all about money and not about the human resource. But what we can do with the money is what's important, not accumulating a number on a balance sheet. This is what Adam Smith proved in The Wealth of Nations. Before Adam Smith, countries thought that their goal was to accumulate gold, and Adam Smith proved it's like, no, your goal is not to accumulate gold. Your goal is not to accumulate gold. Your goal should be to accumulate resources with that gold. And I think that's what's going to happen once we get hyper Bitcoinization. And I think most fiat economists can't understand this.
Time is wealth.
Rory, would you trade places with Warren Buffett right now if you could?
Absolutely.
This guy's an 85, 90-year-old man.
You're right. You'd also have to be a 90-something-year-old person. Would you trade places? That's an interesting question. Would you trade places with somebody who's worth $50 billion if it also meant, because you're trading places, that you're now 95 years old? Would you trade places with them?
Can you explain the relevance of the question to my question?
You're assuming that the only resource that we're accumulating is money, and I'm just saying it's not.
Again, you guys are all looking at it from an individualistic point of view. I'm saying Bitcoin is fantastic from a person holding Bitcoins.
The only way to look at it is from an individual. I cannot speak from someone else's perspective.
That's not true.
Speak for a group. No, I cannot.
But that's not true, because
I can only speak for myself.
When you make statements such as Bitcoin will become the only money, right? What you're doing is actually you're making a policy decision. You're basically
not making policy. It's not a policy. It's not a policy decision. It's a choice. It's a choice that humans are making. Now, not everybody agrees with me on this. I said this. There are people who do not agree with me on this, but it's a choice that people are making, that they want to hold their wealth in it, and the people who hold their wealth in things which are in monies which are less valuable will lose economic resources on a relative basis. So they will become poorer because they hold a much lesser money, and that's fine for them to choose that. And I think they will find over time that they won't want to choose that. I think the reason.
I was just going to say, I want to talk kind of to the broader social or societal aspects that Roy wants to talk about, because you don't seem to value the perspective of the individual quite as much. From a societal perspective, I want you to sort of just take your brain and walk through what happens when you have an inflationary currency. Now, the scenario that